Crypto yielders, welcome back to Crypto Yield Pro. Today, we are diving deep into Abu Dhabi's bold $436 million bet on Bitcoin's secret revealed. You won't believe what's been happening with this massive crypto investment. Stick around because we're about to uncover some mind-blowing updates. Let's get into it. All right, let's start with the basics. Abu Dhabi, through its sovereign wealth fund, Mubadala Investment Company, made headlines with a colossal $436 million investment in Bitcoin. This wasn't just any investment. It marked a pivotal moment where a major government-backed entity decided to put significant money into the king of cryptocurrencies. This investment isn't just a number, it's a statement. Here, we have one of the world's wealthiest funds diving headfirst into Bitcoin, signaling to the market that crypto isn't just a fad for retail investors anymore. Mubadala, managing over $280 billion in assets, chose BlackRock's iShares Bitcoin Trust ETF IBIT for this bet, which is fascinating because it shows a preference for regulated exposure rather than direct ownership. The timing is intriguing too. With Bitcoin hovering around $100,000, this move by Abu Dhabi could be seen as either a vote of confidence in crypto's long-term value or a strategic play to diversify their massive portfolio. This investment represents roughly 0.13% of Mubadala's AUM, which might seem small, but it's a significant percentage when we're talking about Bitcoin's volatility and potential for growth. Now, let's talk about the immediate aftermath. Bitcoin's price didn't just nudge up. It jumped by a notable $2,000 right after this news broke. This isn't just because of FOMO. It's about market psychology. When a fund of Abu Dhabi's stature invests, it sends a message to other investors. This asset class is here to stay. The market reacted positively, but it also raises questions about whether this was a short-term spike or the start of a new bullish trend. But let's not get too carried away. While this move is bullish, it also opens up discussions on risk management, custody solutions, and regulatory implications. Remember, we're talking about a sovereign fund navigating new waters with Bitcoin's volatility. The market's response could be seen as a confirmation of Bitcoin's safe haven status or merely a temporary surge driven by speculation. Analysts are split, with some predicting a stabilization period while others see this as the beginning of a larger trend in institutional adoption. I'm on the side that institutions and countries will start to buy heavily into Bitcoin. Security is paramount, especially for such a large sum. Here's where things get technical. Abu Dhabi's choice to go through BlackRock's iShares Bitcoin Trust rather than self-custody or use other methods raises eyebrows. Why opt for an ETF when you could hold Bitcoin directly? It's likely about regulatory comfort, providing an easier exit strategy, and perhaps a strategic move to influence or test the waters of ETF markets. This choice might also reflect a broader trend where institutions prefer the regulatory oversight and liquidity of ETFs over direct crypto custody. This decision might inspire other institutions, but also highlights the need for robust security measures. We're talking about multi-signature wallets, cold storage, or even new-age custodial services tailored for institutions. The implications here are vast, touching on everything from the ongoing debate over self-custody versus third-party solutions to how this might affect Bitcoin's decentralization ethos. Now, let's zoom out. What does this mean for the global crypto landscape? First off, it's a green light for other sovereign funds or even nations to consider Bitcoin as part of their reserves. Now, imagine if more countries follow suit. We could see a shift in how nations view and utilize cryptocurrencies. This might lead to more regulatory clarity or perhaps a push for CBDCs or central bank digital currencies to compete with Bitcoin's dominance. The geopolitical aspect cannot be overlooked. It could change how international finance leverages blockchain technology for cross-border transactions or as a hedge against inflation. But let's keep our feet on the ground. This is still early days. The real test will be how these investments perform over time, especially with the cyclical nature of Bitcoin's market. If Bitcoin continues to appreciate or at least maintains its value, we might see a domino effect where other nations or large investors jump into the fray, potentially leading to a more stable and accepted crypto market. The crypto community has been buzzing. From Twitter to Reddit, everyone's talking about it. Some see this as the dawn of institutional Bitcoin adoption, while others caution about the potential for market manipulation or overhyping. The sentiment is a mix of excitement and skepticism. Will this investment lead to a more mature market, or is it just another bubble waiting to pop? The community is split, with some hailing it as validation of Bitcoin's intrinsic value and others worried about the centralization of wealth in crypto. What's next? More funds might dip their toes in, or we might see a stabilization phase where the market absorbs this news. Either way, it's a fascinating time to be in crypto. Keep an eye on these developments, especially if you're into long-term holding or planning your crypto strategy. The narrative around Bitcoin could shift from speculative to strategic asset allocation, given the right market conditions. If you found this insightful, hit that like button, drop your thoughts and comments, and don't forget to subscribe for more juicy daily crypto insights. Wait until the end to check out the card on the screen for our previous banger video. And hey, if you're looking to get ahead in the DeFi game, my ebook, Financial Freedom, The Ultimate Beginner's Guide, is pinned in the first comment below. It's not just about learning, it's about supporting this channel and your journey to financial freedom in the crypto world. Stay curious, stay invested, and keep yielding those profits. See you tomorrow.